Good morning, traders. This is Michael coming to you from Game Edge on Monday, August 4th with our pre-market prep session. Thanks for joining us this morning. Make sure you like and subscribe our YouTube as well as X. That way you'll be notified when we go live. As always, here at Game Edge, we go through our three pillars: sentiment, structure, and trend. Make sure you're checking out our gammaedge.us webpage. Also, we posted a significant amount of content over the weekend. And you can sign up for our weekend newsletter after the bell and also before the bell, completely free, as well as our flagship courses that I'll be going over here in just a few minutes at the end of this presentation. So starting off with our market trend model, as always here, we look at our bolded white CT. Again, this is instantaneous CT. This is buying versus selling within the overall market. And obviously, we've seen some weakness the past few days. We're using the tick US for this presentation. This is a little bit more noisy on the tick index. And then we use our ARCX, which is a little bit more quality data for our mechanical portfolio. Quick takeaway is obviously if you're upper left to lower right below our shorter term moving averages, which we use for momentum, and you're into the colored ribbon, this is weakness and sellers are in control of the overall market. You see this is the first day in many days last Friday that we actually had new lows significantly outpacing new highs. So obviously moving to the downside with selling occurring in the overall market, and our filtered cumulative tick below zero really for the past week. This last week, we were talking about that of being cautionary once we got below these moving averages, and we saw that the filtered cumulative tick was moving below zero into the downside. Institutions were selling more than buying. And then our cumulative tick obviously below zero. So what we want to watch for is we've now cut into our colored ribbon, which is our longer look back period. We want to see this bolded white CT if the bulls are going to start taking back control, or if buyers are going to start taking back control of the overall market. We'd start moving back above these shorter term moving averages, and then we'd emerge out of the colored ribbon and start moving to the upside. If we're going to see more weakness, we'd go below the bottom of the colored ribbon in the cyan, which will show on the ARCX. That actually on the quality data, we're already below the colored ribbon, which is a bearish state for us. This obviously you should be managing your risk and not going long the overall market until we start emerging back to the upside. If you're a longer term swing trader, obviously if you're a 0DT trader, you'd be looking for this, just the bolded white CT to start moving back above these shorter term moving averages. And you see that these start to fan out as we get below. That just increases your confidence to the downside as these spread apart and start becoming overhead weights for us to cross back above. So we'll watch this intently. We do have negative slopes now on the colored ribbon across the board. So again, looking at this as an overall pullback, obviously we'll see how this plays out if we retest back into the colored ribbon and fail to the downside, or we start emerging back above. SPXA, this is our cruise ship, longer term expiries here. As denoted by the purple tiles, this is institutional positioning and larger market participants. We are still call dominated via the SPXA, but you'll notice up here, transition areas, 6445 to the upside. It's off the screen, 6400 to the upside. We'll be intently watching this 6300 large gradient strike there, significant amount of net OI. Looks like our implied open is around 6270, as I just checked before we started this. So again, getting above 6300 would put us in a little bit more bullish, positive gamma look for a possible move back to the upside. You'll note that the degradation of the overall net delta, this used to be completely green above and below spot price, but you've seen some actually out of the money calls closing, or out of the money speculation closing, exposing these in the money puts, which is the red net delta here. Not a significant of downside out of the money put speculation at the moment, so these are still supportive. If we're above these via spot price, you'll notice 6200 down here is a significant level also via the SPXA. So some key levels to watch via the overall larger option structure as we head into the August expiration. SPXP, this is obviously our speedboats. These contracts turn over much more rapidly via 0DT as well as daily and weekly. We are put dominated above and below spot price, as you'll denote by the red net deltas completely across the board here, above and below spot price. You'll note the transitions are wider on the all expiry. So again, this is uncertainty in the overall market. 6200 to the downside, that's that index level that would be most likely supportive if we got down to there. 6270 is our implied open, right in the middle of the overall DEX transition, and the GEX transition we're at the bottom of that. So again, noisiness area via 62.45 all the way up to 63.50. You see the transition there on the full expiries. That's going to be important to the upside at 6,300. So really a confluence there of the SPXA and SPXP all expiries transition for the delta. They're roughly around 6,300 within the overall noise floor there. So really not much to take away there. Put dominated within the overall structure, all expiries on the SPXP. Moving on to the SPXP OI change, just one of our tools that we watch day over day for positioning within the overall market. I'll just draw your attention to the bottom down here. Obviously, we've been discussing the past week of puts outpacing calls, so you'll notice the gradient bar here across really a 2-to-1 on the 8/8 expiry of the OI for the puts versus calls. Almost up to 100,000 here, but really just roughly close to 40,000 here. So 2-to-1 puts going into the overall complex, which we're seeing obviously within the SPX structure. It's put dominated, and then the speculation obviously to the downside. So again, key tool here at Gamma Edge that we watch. Obviously, you see up here at late August and September that the calls there are obviously almost the same as the puts there. So really no change there. But just the day over day OI change is important to watch. Again, we talked about this really the past week of the puts just significantly outpacing the calls, and you see that in a few of our other tools. Moving on the SPXP GEX ratio, we're barely above 1 on this overall significant pullback. Obviously, still that gives the edge barely to the bulls for call speculation, but just a significant drop. And this is also spot price sensitive. So as you move down, you capture a large amount of those out of the money puts become in the money, obviously changing the overall GEX ratio. So what we'd want to see if bulls or call speculators are wanting to take back control of the overall structure, we'd want to see this start to gain a positive slope back to the upside as SPX starts moving to the upside, indicating short dated call gamma is going to the overall into the overall complex and outpacing the short dated put gamma. And obviously with the confluence of the rising in price via the SPXP. So we'll keep an eye on this. If we do drop below 1, we'd probably get more bearish and look for more downside, as that would indicate the short dated put gamma is just swamping the short dated call gamma and outpacing, and obviously speculation to the downside is continuing to increase. So just barely above 1 here within the noise floor, again 1.03. So we'll give the slight edge to the bulls with a slight positive slope here, but again this could go either way via the SPX GEX ratio. Moving on to the delta balance, obviously significant drop in the delta balance. This right hand plane, which is your green dotted line, that's out of the money call speculation. We talked about that was waning way back here on the 29th of July. We had a short-term bounce, but then we were looking at that zero line. We dropped below the zero line on the 30th, tried to rebound, really didn't get a significant rebound within the right-hand plane, which is your out of the money call speculation. And then you see this on the 31st, did not get back above zero, and then obviously your drop. So this is telling you that out of the money call speculation was drying up fairly rapidly. We talked about actually this negative slope down here all the way back on the 25th when we were starting to see the market trend model give us some cautionary signals. And then this just continued to the downside. Conversely, you see the left-hand plane, which is below spot price. We did see a quick rebound, obviously in the left-hand plane, but this was in the money calls. Obviously, these were way deep in the money within the overall spot price as we were testing up towards 6,400. And then we started to see that start to drop back down as spot price came down, and those in the money call holders started taking some of the profit. But the key metric here is this out of the money call speculation. We have to have out of the money call speculation drive the SPX options complex to the upside. So what does that mean? That means as the speculators open out of the money calls, whether that's a 20 or 30 delta or in the money, it doesn't really matter. But that's a positive delta going into the overall complex. That would be our book getting longer as traders, so that is the dealer book getting shorter, and they have to hedge flat that positive delta. So how do they hedge flat? They buy obviously any instrument, which would be the SPX, ES, however they do that hedging. So as you see this out of the money call speculation start to wane, that most likely translates to price not being able to appreciate to the upside. Now, does that mean you're going to get a drop in price? No, because we've seen that overall cycle continue just back and forth as out of the money call speculators take profit, and then SPX can continue sideways. But when you start seeing a dramatic drop in that out of the money call speculation, and then you start losing the overall delta balance, which is the balance between the in the money and out of the money calls above and below spot price as well as puts. Once that delta balance starts dropping, then that tells you that the short dated call gamma is really starting to wane and leave the overall complex, and the short dated put gamma is starting to override, and the out of the money put speculators are starting to drive price to the downside as the out of the money call speculators close. So that was a long run for this slide, just to say that this tool really is invaluable for here at GameEdge for watching what is happening with the SPX structure and anticipating price at least sideways consolidation or the possibility of weakness coming into the complex when you start seeing this out of the money call speculation leave. And then obviously as you see the out of the money put speculation start to increase to the downside. So projected on out in time, we're at 1 below the 0 line, so we could see some more short-term weakness. And then we see a short-term recovery back in onto the 8th, which is close to Friday. But again, it's a weak recovery at the moment. So we'll see if this continues to improve and we see both of these start to drive above 0, indicating out of the money call speculation and delta balances going back towards 1, which would give us a little bit more bullish overall look heading into Friday. But as of now, weakness under the 0 line, speculation still to the downside. We could see a short-term bounce though, a relief bounce via today or the next few days. So we'll continue to watch that day over day. All right, jumping into 0DTE SPX game plan. Levels for today, obviously, we're put dominated within the overall structure, above and below spot price. We have a very large drunken sailor range. You see this low exposure here. This is going to be very choppy within this overall area. Staying above transition will lean a little bit more bullish. Obviously, 62.45, 62.50. We're looking right around 62.70 this morning, just in the middle of the drunken sailor range. But if we do get above this 6,300, we improve dramatically via the overall transition area to the upside, which would be the DEX transition, DEX and GEX transition. Obviously, would capture all these in the money calls here. So again, that would be more supportive as we drive to the upside. You see COTMC here, though. That's our proprietary level as the out of the money calls become in the money. So again, this could be a profit taking area from 62.90 to 6,300. And the top of DS. So historically, this is an area where we see significant choppiness and sometimes historically profit-taking area. So again, this will be a key area to the upside that we'll watch. And then the downside, obviously staying above transition, utmost importance. If we get below transition, we lean a little bit more weaker and bearish for a move down towards the COTMP, 62.20.25, bottom of the drunken sailor range. And if we lose the bottom of the drunken sailor range, we would be full short for a move down towards 6,200. So we'll watch how this plays out at the open. Obviously 62.70, roughly within the overall low exposure area. So if we're in the low exposure area, we'll be driven by intraday volumetrics. That's why our vol-m command becomes important. That gives us an idea where the intraday speculators are looking to place bets via the vol-m. So if we see positive slopes on our call and put centroids, obviously that would be speculation to the upside. And if we see negative slopes, that would be speculation to the downside. So key tools to watch there intraday, and we'll continue to watch that. As the net stat command, this is high sensitivity levels. We've already talked about 62.50. That's a transition level to stay above. Make sure you mark those on your charts. This would be supportive as we pull down into that area. And then if we lose that, we'll be losing these in the money calls and dropping into that a little bit more negative delta gamma area. To the upside, 6,300, we've already talked about that. In the money puts, you see that they are winning the battle at the moment on the upside. And you go to the charm, these are out of the money calls. Those will continue to grow overhead and provide an overhead weight. So we have a kind of line in the sand above of in the money puts and then 6,300 out of the money calls charm. So two factors really not supporting price appreciation there to the upside, and then to the downside, obviously out of the money puts significantly below our spot price at 6,200, but then 6,250 in the money calls could be supportive as well as that transition area. And then we see the key sensitivity levels of gamma driving price here, 6,300 out of the money calls. That's why I said if we get above that 6,300, most likely we'd see a dealer adjustment bars or maybe a quick move to the upside. And then to the downside, 6,250. That's a key gamma area. If we lose those in the money calls and that overall transition, most likely we would drive to the downside a little bit more pace. So we'll continue to watch that. So moving on to the game plan for today, let's check the pre-market price here. So pre-market price 62.72 roughly is where we're going to open at. So let me open up our game plan for today. So I manually draw these 0 DT levels, but we do have a script for 0 DT as well as full complex. So I loaded the full complex trading view levels that ran this morning. Pre-market for our members at 748, and then our levels run automatically. So you just overlay those on your trading view chart. Again, we'll go over the game plan. 62.72 is where our open is going to be, or roughly around in there. We'll be above transition, obviously, and 0 and in trans for the full complex. So this is going to be an important area. Again, if we see any pullback, bottom of the drunken sailor range, 62.20, and then we'll be right around that COTMP, and then 6,200 net gex, negative gex on the full complex. Again, key important levels to the downside that we are anticipating hold. If we get below 6,200, we'd most likely be significant risk off to the downside. So choppiness action, if we drop down below transition, we look for some sort of move like this to come back up and test transition area, and then see if we get a rejection back to the downside. If we get above the overall transition area and stay above the transition area, we look for some choppiness type action here to hold. And this would give us an opportunity to possibly go long back to the upside towards the top of the drunken sailor range. And if we're above drunken sailor range in 6,300, we'd be looking up towards the 63.20 level, and then all the way up towards 63.50, which is going to be a key level to the upside. So hopefully that helps everybody for today. The game plan, again, go back over our 0 DTE for us, and then we'll take any single stocks that anybody wants to review. So game plan there, drunken sailor range, obviously above 6,300 net long, below the bottom of the drunken sailor range, 62.25, we'd be net short. Within the overall drunken sailor range, again, driven by intraday volumetrics. So again, staying above transition will be key. We could try to be long above transition, but again, within drunken sailor range may be choppy. So these would be button to seat trades. Driven by intraday volumetrics, so we'll have to watch that. So, all right, thanks everybody for joining us today. A little bit longer run there this morning. Wanted to get all that information out for a Monday. If anybody has any questions about single stocks real quick, I'll hang around for 2 or 3 more minutes and we can go over those. I can take a look at our web app this morning. So again, like and subscribe. Make sure you're checking us out at GammaEdge.us. I'll bring that over, webpage over, so everybody can take a look at it and see where you sign up at. So here's our GammaEdge.us. Get started over here. Start your trading journey. Make sure you sign up for one of our key newsletters. Put your email in, and you'll be notified when those newsletters go out. Free courses here. GammaEdge Fast Pass is our flagship education course. You can sign up for it for free. Again, significant amount of education there via the Fast Pass over our thesis, our methodology, and the exact tools we use to trade intraday. So lending tree, I'm not sure if that, let me check that out. That may not be under dealer control, depending on what the OI is. What is the ticker for lending tree? Let me get our tree. Oh yeah, that makes sense. Sorry, been a while since I looked at lending tree. Let's see. Yeah, so tree is not in our database or our universe, I guess it is. We could add it. I'm not sure what the OI is on tree. I would say it's probably low. So you need to have a significant amount of OI, obviously volume also to be under dealer control, and look at the overall option structure, like compared to NVIDIA, Apple, Google, other ones like that. So, but I can check on that. We can always add tickers. We add tickers very low. Yeah, there you go. So that just basically means that you're not necessarily under the hedging mechanics of dealers and market makers. So that's kind of why we don't look at a lot of those low float, low OI stocks. We'd rather have confidence and confluence via dealer metrics and dealer hedging. So yeah, that's kind of our thought process. So yeah. So all right, thanks everybody for joining us. Everybody make it a great day, and we'll see you later.